Hello again, this is Ashley Montero here. A lot of hotel owners have come to me and asked me what could we do better or why have our businesses failed. And I think rather than try and describe it for many different people, I would like to do a video on 10 tips for hotel investors to do it right, to get it right from the beginning. I love to see hotels succeed. It hurts me when I see a hotel that's not, performing to its optimum. So let's start right away with the 10 tips, okay? Why do you invest in hotels? See, people's reasons for investing in hotels are different. Some people buy a hotel because they like the lifestyle. So for example, you have a paddy diver who wants to buy a hotel in Koh Tao because that's where he loves to dive. Others, on the other hand, want to get a good return on investment. So they want to grow their capital, they want to grow their bank balance. And so their objectives are basically to earn a good cap rate, which rewards them for their risk profile, and at the end of a period perhaps sell the hotel and move on to something else. So essentially, you've got to be very clear as to why you're investing in hotels. If you're investing for a lifestyle, there is a certain way to go. And if you're investing for the purpose of dollar return on investment, there's another way to go. The two are not necessarily the same. This brings me to the second point, which is hotel size. Now, in Thailand, you have to license your hotel beyond 4 rooms. And I have a lot of investors who come to me saying, we would like to have a 9-room hotel or a 20-room hotel. In my thinking, I believe that a hotel does not make money until it reaches 40 rooms. So if you're doing it for lifestyle or you're doing it for investment, I'm sure that all of you want to make money, right? So if you want to make money, then it makes sense not to consider buying anything that's below 40 rooms. For me, I think that you really start to make money once you cross 100 rooms. At 100 rooms, you're beginning to see the scale of operation kick in. You're able to level up, you're able to hire the right resources. There's all sorts of benefits to having the right size. And so I think that the hotel size is something that you should think about very carefully. Of course, I understand that you may be coming from a point of view of, I have X dollars to invest. But I think that if you already have so many dollars to invest, you can perhaps find a little more investment to buy the right asset, because what you want to buy is an asset that produces revenue for you month after month and not one that sucks revenue from you and takes money out of your pocket. Which brings me to the third point, hotel license. I know that this point is something many of you would not have thought about in the past, and prior to 2014, this was not an important point in Thailand. About 80% of the hotels around Thailand were unlicensed. And today, those are the people who are trying to sell their assets. So when you're buying a hotel, it is really important to understand whether the hotel has a proper license. If it has a license, does it have a license for the number of rooms in the hotel? These are all points that you need to think about. If you do not think about the hotel license point, you may find yourself in the situation where your hotel is doing very well, and then you are suddenly raided by the authorities who will shut you down, or perhaps be looking for to become an investor with you in the hotel's profitability. This you do not want, right? So start thinking about the hotel license right at the point where you're buying the asset. The next one is about location. And this location point goes back to point 1. Are you investing for lifestyle or are you investing for return on investment? Because even though when you say Thailand, you're talking about Bangkok, Pattaya, Phuket, Chiang Mai, Krabi. All these destinations are actually very different. For example, if you like nightlife, Pattaya may be a very nice place to settle down. But if you like wellness, it may be Koh Samui. If you're into meditation, you may want to be in Chiang Mai, right, in the north, where there are several meditation wats. And if you just want to make money and be on a beach, that may be Phuket. So the choice of destination depends on why you're investing to begin with, and the location will derive from there. One point that's worth noting here is you may also want to look at your budget, because hotels in resort locations tend to be cheaper in terms of land prices and asset prices. And in my last video, I actually talked about Pattaya, which makes a lot of commercial sense, simply because it is not really priced yet for its potential. Other destinations around Thailand like Phuket or Bangkok may already be priced at par or above par, right? So it really depends on what you want to achieve that defines the location. Now I come to point 5, which is work with an experienced broker. And I'm not saying you should work with me, but you need to work with a broker who really understands your needs. First, understands what you want to achieve with your lifestyle or investment choices, the corpus or the size of the fund that you want to invest, and where this money is most likely to be leveraged for you, so to speak. You also might want to think about whether this broker has the contacts with the right hotel owners to find distressed assets, which is of course everyone's dream in a real estate market, and also whether the broker also has contacts in the legal and government spheres, which are very essential to getting your show on the road. This brings me to the next point, which is due diligence. I think the importance of this point can never be underestimated. This is probably the single biggest point why hotels fail. You need to do your due diligence, starting with the destination itself, the kind of numbers that go into the destination. What are those numbers going there for? You need to look at the building structure, perhaps get a qualified engineer or a quantitative surveyor to give you an estimate of how sound the structure is, what you would need to spend in terms of capex to bring it up to the level you want. Also, in terms of legal, you need to check whether the company, you can buy the asset or you can buy the Thai company in which it is housed. But either way, to check that the asset is free and clear in terms of title, and the company, whether it has any liabilities that you find out about later. This can kill a business before it starts. So the importance of doing the right due diligence and finding the right legal firm to do this due diligence is very important. Now I know you will say, just go to any of the big international, multinational lawyer firms and they will guide you. I would like to share with you that they perhaps might be the biggest deal breakers if you're looking to invest in Thailand, because they're not on the ground. You're probably better off going to a medium-sized Thai legal firm where you're getting the right advice at the right cost per hour. You're not being billed in terms of thousands of dollars per hour for advice which may be relevant in New York or Tokyo, but not in Bangkok or not in Koh Samui. So you need to find that right medium-sized outfit of lawyers where you get completely accurate legal advice. My next point, long-term strategic thinking. Now, I know this may sound funny, but perhaps you should, even before you buy an asset here, think about when are you going to sell it? At what price would you like to sell it? In percentage points, what kind of appreciation would you like to make on that asset? How would you like to structure it for your heirs? Perhaps you don't want to sell it. It's making so much money that you want to just keep it in your family and let it go to the next generation. Now, to start thinking about this point, even before you bought this asset, might seem a little strange, but I can assure you that if you do think this way, then you will make the right buying decisions. All right, so let's move to the next point, managing the hotel. This goes back to point 1, why to invest in hotels. So if you bought it for a lifestyle choice, you probably want to manage it yourself, and therefore what you need is a good general manager. So what you might want to do is actually, as part of your due diligence, when you come to that particular area, let's say you want to invest in Koh Samui, you stay in a competitor's hotel and try to steal their general manager, okay? If you like the way he runs the hotel, this may be the right manager for you. On another way, if you look at it, you may not want, you like the lifestyle, but you may not want the hassle of the day-to-day operations and running of the hotel, where you need to look at figures every day. You may want to look at these figures on a quarterly basis. In this case, Thailand has many international flagged brands as well as local brands who run hotels to international standards. And I think that the choice of asset that you buy will define which management companies would be interested in it. One factor which is really important is that many international flagged brands need you to cross 100 rooms before they will even consider managing that asset. Another thing is that they want the asset to be eco-friendly and have less of a carbon footprint. So these are the factors that you've got to consider when you're deciding whether to manage this hotel yourself or give it to an international company or local company. Hiring the right associates. Now, again, I think that in Thailand, you're already in good hands because Thai hospitality is legendary. But even legendary people require the right leaders to tell them which way to go and which way to follow. And you need to handpick the associates that you decide to employ in your asset, because these people are going to make or break your profit and loss account and your balance sheet. I think that companies that are managing successfully all over the world have realized the importance of this point. And of course, the business plan. Actually, this part should have come right at the beginning, because no hotel or no asset is going to work unless the numbers stack up. So you can save yourself a lot of trouble, a lot of expense and legwork by just starting with a business plan and setting out what kind of returns you would like to see on your investment, and then to extract data from good sources to put into your spreadsheets, and then run different business scenarios, worst case, best case, something in between, so that even if things go really wrong, you still end up making money. And on that, I will end this tips for investors here. If you like this video, please like and subscribe. You can find me in the notes below if you need to discuss further on any of these points or all of them. Thank you.